Welcome back to Morning Trade Live. Let's talk streaming media and the progression into the Metaverse. Tim Nollen joins us, U.S. Media Tech Analyst at Macquarie Group. And Tim, welcome to the show this morning. You cover streamers, media content, and you're adding Metaverse to the list. Which companies are included in that category?
Yeah, hi, Oliver. Thanks for having me back again. It's a potentially very long list. The one stock in the Metaverse that we follow and are very enthusiastic on is Unity. This is a company that provides 3D real-time software for content companies to make things in the Metaverse. And, you know, gaming is the first iteration of that. But there will be a lot more to follow, whether it's, you know, building virtual stores for e-commerce, whether it's, you know, film and TV production. I mean, even architectural design. This is all stuff that's going to run off of 3D software. And this is what Unity provides.
This is kind of like picks and shovels argument in a way, sort of the tools to create a metaverse, not necessarily the platform itself.
Yeah, we look at, yes, good way to put it. We look at Unity as a builder of the metaverse. It provides the tools that other companies can then use to create their own platforms, to create their own experiences on the metaverse. So, you know, like I said, the first iteration, which is very well established by now, is video games. And this is really where a lot of the metaverse activity has gotten underway. And then, you know, it's not just playing games online. And by the way, you don't have to even have a VR headset on to do this. It's just a next iteration of the online or the mobile world. But the games are built on 3D software, and Unity provides something over half of all the software that all games are made on. Beyond that, you know, you hear about things like live concerts taking place in Fortnite, or even graduation ceremonies. And then you've got, you know, just any form of entertainment, TV and film consumption. And to that end, Unity just acquired Weta Digital, which is Peter Jackson's, you know, 3D software for film and TV production. All the special effects that you saw in Avatar and the Lord of the Rings series, that is now owned by Unity. And so they are really extending their capabilities to a higher grade of production with more things that can be done in the universe, in the metaverse. And if you think about it, you know, the creation of NFTs, the creation of, you know, virtual stores, all using 3D software. All of this is the kind of stuff that Unity can provide the basic building block for other companies to do. So that's one side. Another side of it for Unity, actually, the way it's really going to make money, I think, is all the services that it can provide. Its biggest moneymaker now is actually advertising technology. That's its primary driver of revenue. And it's basically providing ad tech services, primarily for gamers. But if you can see all these other areas they're moving into or can move into, these will be new advertising bases that it can service. Okay,
so advertising within the metaverse and building the metaverse itself seems like a pretty good business to have if the metaverse takes off. How are we going to measure that? How do we gauge additional participation in this virtual world beyond what is already taking place, which is a pretty good deal, a pretty good amount of virtual engagement over the last year and a half? How are you going to measure this along the way going forward?
Yeah. Well, it's pretty clear it has taken off already. You know, gaming is a clear early indicator of that. But I think we should be careful about using this term metaverse. It's not, you know, a new device experience. It's not like we're all going to be walking around with VR headsets. There will be some of that, but it's really just a next iteration. It's a next, you know, stage in the evolution of the internet. And some of it's going to be, you know, creating avatars and, you know, making NFTs that we can sell, you know, and buying virtual real estate and all of that. But some of it is really just like extending our normal lives. I mean, look what's happened since the pandemic. We spend half our time on Zoom calls these days. I'm obviously doing this from my home office instead of from the office, you know, in Manhattan. And so all of these sorts of activities will be already are, you know, taking place in this new, you know, kind of hybrid reality that we're already living in. How to gauge it in terms of companies like Unity or other companies that will be builders of this metaverse, whether they're platforms or software providers or applications, I think look at their growth rates. You know, as we move through this COVID period where we had this big advertising bounce last year, you will see some slowdown in growth, I think, this year for companies that have advertising exposure. But the fundamental growth, I think, is going to be very much in the 30% plus range for a lot of these companies. As they report numbers over the coming quarters, I think we're going to see some pretty interesting growth.
Okay. Tim, now, if we are moving further into this virtual world, does that come at a cost to traditional media companies, or do they get to run along with that? I noticed that you dropped your price target expectations for Discovery, but you still say to buy this company, you still say to buy content and streaming.
Yeah, for the most part, we are bullish on advertising technology and companies that are basically well established or will be well established in the future of the internet and mobile communications. Let's put it that way. We're much more neutral on more of the traditional media names. Now, we do have a buy on Discovery, as you pointed out. We upgraded Discovery maybe 3 months ago or so. And the call there is really on the Warner Media merger. This will create basically the fourth largest SVOD streaming service if you combine Discovery Plus and HBO subscribers. So after Disney Plus, Amazon, and Netflix, this will be the fourth largest in the world. Revenue-wise, the combined company will actually be second only to Disney and above Netflix. And it will have the highest margins, actually, because HBO comes in at quite high margins. So it's really a call on, scale that matters, a breadth of content, from the what I call sort of pseudo reality content that Discovery creates, along with, the heavy dramas and all of that HBO brings, the rich library that Warner Brothers brings. All of that, we think, creates a very valuable franchise. And Discovery stock is only trading at about 7 times PE. It's near the bottom end of its traditional media peer group. So, it might be patient for the deal to close, hopefully by mid-year. But we think there's a lot of upside to this one.
All right.
We're more neutral, really, on the rest of the group. We do like Disney, but we're more kind of neutral, just kind of not necessarily bearish, but just kind of not very excited about the rest of traditional media.
All right. Thank you, Tim. Appreciate it, Tim Nollen, joining us from Macquarie Group. Let's bring in Tom. All right, Tom, bullish on Unity and Discovery. How do you trade them? Start with Unity.
Yeah, we'll start with Unity. Well, this is one of those high growth names, right, that might be under pressure if interest rates continue to rise. So how do you take advantage of maybe the 40% pullback that we've seen from the all-time highs in this name? And implied volatility is still relatively elevated in here, so that boosts up the option premium that you get to collect on selling a strategy like a cash secured put, which is what I looked at here, going out to the February monthly cycle, so about 44 days until expiration, where I'm going to sell the out of the money 115 strike put in the February monthly option series. If you can collect roughly about $5.50, it might be a little bit less than that right now. That's your potential reward on it. But at the same time, your break even on this type of trade, where you get to keep that credit, is all the way down at 109.5 on a trade like this. So you've still got that cushion to the downside if the tech sector and software sector in general take some more, bumpy roads to maybe reversing, right? So you're giving yourself that cushion to the downside, selling that cash secured put. You're collecting a pretty hefty premium due to the fact that implied volatility is elevated. But then also, Oliver, if the stock does continue to fall and you actually want to own those shares, you get to buy them at 109.5 as opposed to buying them in the open market. Now, if it doesn't go below 115, then you get just to keep that option premium that you collected on the initial trade. So kind of a twofold type of option strategy here, but still you get that nice cushion to the downside before you start losing money on a trade like this. And you can see from the risk profile there that the break even is pretty significantly below, about 13% below the current share price.
All right, selling downside in Unity. What about for Discovery? You've got more of a kind of straight up dip buying bullish take here.
Yeah, a little bit more aggressive if you wanted to be bullish on this one. I believe Tim's price target's around $40 on Discovery, and this stock's pulled back over 60% from those all-time highs we saw in early 2021. So it gives opportunities if you want to get bullish on this. So not as much option premium in here. So I looked at a different strategy going out to the April series. So giving myself over 3 months in this particular trade, about 99 days, where I'm going to buy an in-the-money call with about a 70 delta. So that's going to make the call react more like the stock. If I pay a $3.80 debit on that, that's going to be my risk, $380 per call that I buy. But with that 70 delta, it's going to react more favorably if Discovery reverses here and continues to move higher. My break even, where I start making money at expiration, 28.80 to the upside. That's about 6.5% above the current share price. So you don't need that big of a move, but you're giving yourself a little bit of duration out to that April option expiration of nearly 100 days. So this is a little bit more aggressive. You're not paying a lot of option premium. You're buying a deep in the money call, almost like a stock replacement type strategy. So instead of buying the shares, you buy that in the money call.
All right. Bullish on Discovery, looking for a comeback. Hard to find a more downtrodden streaming connected play than that. Thank you, Tom, for putting the ideas into action. Thanks again to Tim Nollen for the bullish take here on the Metaverse.